You're listening to the Valley Current.
Hey, Steve, welcome into the Valley Current. Not on Friday, but on Monday, because we had a big hearing in a case that meant my Friday was completely consumed. And then I figured it was probably a busy day for you anyway, because wasn't it the last day to file tax returns, or do I misremember that?
Yes, it always takes a few days after the tax day to recover. And those days are spent on essentials like laundry and piles of empty coffee mugs and things like that.
Because people are always waiting to the last minute, right?
It always works out that way. And no amount of monetary incentives seems to change that behavior.
Yeah, I mean, it's a little bit like the task increases to the time increase. What is it? The work increases to fill the time, or something like that. There's an old saying, or what some people used to say: "Bad planning on your part does not create an emergency on my part." That was a famous statement too. I've heard many, many times.
I like that. Right?
That's a good one. But when you look at the whole tax system, do you say to yourself, it's just way too complicated? Because I'll tell you, I've had, and this is what I think might be a good topic, but you tell me if you spend any time on this, because we do this without really any scripting. I have had a number of people say to me that they're thinking about leaving the United States. And like almost giving up citizenship, almost like they're not quite at the point of giving up citizenship, but they want to have referrals to people that can explain to them the consequences of leaving the United States, not just leaving California, which I think is a first issue. How do you actually exit California for another state, which I think is tricky, because you do have to really make a clear record that you're leaving and gone, or the Franchise Tax Board will audit you and will look at the number of days that you're here and the number of vendors that you get services from, like your barber or your dentist or your medical doctor, to try to determine residency. So that's a question that we can deal with separately. But they asked me the bigger question of like leaving the United States, which I never used to hear that years ago. But now it's almost like in the time of COVID and Zoom, why do I need to be here in the United States if I could be like in Mexico or Canada or maybe even Puerto Rico, where there may be a chance to argue for no federal taxes whatsoever under their special law 20/22. So I'm curious, do you ever get those kinds of requests? Because I think they're happening with more and more frequency, which suggests to me that maybe there's a trend that's starting here.
Absolutely. I've had clients in all those categories and can speak to them, starting with the complexity of the system. And this may be against my own self-interest. I'd actually rather see a simpler tax system. My personal thinking is keep it simple. And
you're not alone. I could tell you, my dad years ago said he just could not believe, and this is years ago when I think there was probably a lot more simplification than there is today, relatively speaking. But my dad, and he lived to almost 90, he used to say, this is getting beyond the ability of anyone to understand, never mind even try to do your own tax returns. And of course, we know there's a lot of services out there and a lot of software out there that purports to help the process. But I have to say, my tax returns are like 6 inches thick. I mean, it's an amazing book every year that gets done. It's just unbelievable.
Well, fortunately for my self-interest, the powers that be don't listen to me, and they make it more complicated each year, no matter what I say or what I want.
Right.
And
So do you think when people, including young people, I usually hear more for retiring people, people who have made it here, they've done really well, and now they think they can just exit with all their wealth without paying an exit tax, not paying, what it takes to really exit the United States. But I've now had people in their 30s. I mean, they've got their whole lives ahead of them, and they're like, we're not sure staying in California or maybe even staying in the United States, the continental United States. And it doesn't mean they want to go to Hawaii or they want to go to Alaska. They are talking about going to Puerto Rico because of some tax benefits in Puerto Rico. And that's pretty shocking to me to hear that from people that young that have so much of their lives ahead of them. And they're starting to think that way because they think, well, if we're going to be quarantined anyway, might as well be quarantined where we don't have to work a third or 40% of the year for either the state of California or the United States of America.
Well, there certainly is a lot of complexity, and a part of it is that to hide the actual tax rate, the system has created many taxes with many different names.
Yes.
And so you may think you're only paying a third of your income in taxes, but it's far more when you add in the sales tax,
you got property tax, you got property taxes that are no longer deductible, right?
And the expatriation tax. And yeah, so you got a whole lot of different names. Gets even more absurd when you get into things like personal holding companies and excess assets tax.
Right.
It's like esoteric taxes.
Right. I mean, it's an amazing number of taxes.
And I'd point you, this is beyond the scope of my ability to answer.
Yeah.
The taxes shot way up around World War I and World War II to
Right.
pay for the military-industrial complex.
Right.
The Cato Institute has an excellent, in my opinion, an excellent website discussing a lot of these issues in terms of tax policy. And I'd point anybody interested or curious in understanding this better to those websites.
It's a great website. It's at Cato, CATO.org. And it's highly recommended. And I agree with you that a lot of people don't realize that these institutes exist because they really do believe that there's too much taxes, there's too much tax law, and there's too much law, period. And I agree with that. Similarly, I agree that there's almost too much law. If we had a real civil society, we would be like, hey, why can't we just be friends with each other? I'm putting up the Cato Institute because they do a great job of presenting what might be called the libertarian view, which is, what if we were all civil to each other and we didn't need all the police, right? And we didn't need all of this, look, there are places that have volunteer fire departments. They don't have a special tax for the fire department. It's a bunch of volunteers. It's a bunch of citizens that get trained to be firemen or firewomen, as the case may be. So, I mean, imagine that we covered more about with do-it-yourself services, right? You could argue that maybe some of the automation is applying, but I know a lot of people that get confused by the software, the tax software that's out there, and they don't really know how to use it, and they won't even try to use it.
The one caution I do have is that an extreme libertarian perspective, I think, ignores the problem of freeloading.
Yes.
And there has to be some, in my opinion, there has to be some regulation. Otherwise, a behavior like polluting or just littering, throwing litter out of one's car window, would have no repercussions whatsoever.
Well, I mean, you could argue the pollution that's happened has caused indirectly, if not directly, this pandemic, and we're paying the price for both the growth in humans and the growth of pollution over time. You can almost make that argument, and the climate change that's occurred. But let's go back to this notion of people call you and they say, I'll pretend to be such a person. I say, look, I'm really tired of paying taxes. Tell me what I should do, and please don't tell me that there's no solution. I would go over and imagine you would say, and then you tell me if I have the list right, you would say, well, you could become a real estate professional, and you may be able to deduct a lot of real estate expenses on transactions or real estate holdings that are losing money for you. Take advantage of that loss, take advantage of the depreciation, have all that apply against your other income legally and validly, and hope in the long run that those pieces of real property have capital gains or are subject to great things like 1031 exchanges or Internal Revenue Code 121 $500,000 tax-free gain. So you're converting sort of this investment into either something that's going to continue to appreciate tax-free, or that you're going to get this $500,000 residential sale exemption for. And then you get into things like Roth IRA and SEP IRA and deductible pension plans and stuff like that. And you start to add up all those little things you can do, but fundamentally you're still paying a federal tax and you're still paying a state tax on whatever is your net taxable income by the time you're done with all these various deductions and depreciation and other expenses that you incur in the course of the production of income, as it were, right?
Real estate is great. I think there's many, many tax advantages to real estate. We could
spend a lot of time on it. And maybe we will, but I want to get to the real nut of the question, which is someone says to you, I want to move to Puerto Rico because I've learned that I could run my consulting business as an outbound service provider into the States over Zoom, over email, over Slack, from Puerto Rico, and get what's called the Law 20/Law 22 decree that says for 10 or 15 years, I won't have to pay federal taxes. What do you say?
Let's work up to that. Roth IRAs, I see far more incorrect overuse of Roth IRAs than underuse. Many people who use Roth IRAs don't understand what they're doing and end up paying much more tax than they should. I'd say 5-to-1 ratio of people using Roth IRAs to shoot themselves in the foot versus people who actually benefit from Roth IRAs and fail to use them.
Including and converting
in
IRAs?
Either case, it's not a do-it-yourself deal. Right. Talk to your tax advisor. Moving on to the bigger questions. Leaving California, I do not, in general, recommend that my new entity startup clients organize in California. I encourage them to organize elsewhere. The most popular states are Wyoming, Delaware, and maybe Nevada still, maybe not. And the test, there's talk about a 6-month test, 180-day test, but that's not the real rule. And as you dig into it, the real rule goes to intent.
Yes.
And so you need to really dot your I's and cross your T's. And again, talk to your tax professional about documenting your intent not to return to California.
Right. So you would say you really should get rid of the residence. You really should get rid of all your investment property. You really should get rid of your doctor, your dentist. I mean, literally, you're creating a new life in a new state, right? Or a new country.
A case whose name I don't recall, and the couple did they exited California to Nevada, and when they filled out the postcard for mail forwarding, they mistakenly checked the box for vacation forwarding. And when the FTB, the California Franchise Tax Board, saw that, they said, oh, you're taking a vacation. That means you intend to return to California, and therefore you maintain California residence.
Wow.
Well, we're Nevada residents. No, you're both. And they eventually won, but to do it, they had $30,000 of legal fees and other expenses.
Oh, they went through hell, I'm sure, and I've heard those stories. So, Steve, I got to wrap up because we've started late, but let's continue down this path of how do people think about this trade-off of leaving California, leaving the United States, maybe going to Puerto Rico, maybe going to other countries, and what the trade-offs are, because there's a lot of issues there. And I'm telling you, I'm getting a lot of calls, And I don't know whether it's just this COVID thing or something else, but why don't you tell people how they can best reach you, because you're one of the greatest CPAs on planet Earth and you understand California taxes and federal taxes inside out.
Well, thank you for those kind words, and I look forward to reaching a discussion of exit from the USA, which is a very fascinating subject. We can spend a whole session on it easily.
How do people reach you?
Can be reached at 408-887-6433 or S. Rabin, SRABIN. That's B as in Bravo, at srabin.com.
Great. Thanks, Steve. Thanks for spending your time. We'll pick this up on Friday, I hope. All right.
Sounds good.
Tune in next time on the Valley Current.